Hey everyone, Paul here, and the other day I had a friend of mine say, hey, I'm working at Perrigo, and it seems like the reported revenue, it seems like everything that we're doing with this company is actually positive news. It's good, right? But yet the stock isn't really trading at a level that makes sense to me. I mean, the stock is down, it's underperforming the S&P 500. I don't know why that is. And so me being me, having the interest in stocks that I have, and of course having this channel, I said, hey, that'd be a good opportunity to do a video, so that's what I'm putting together. That being said, if you have an interest in seeing a video that you would like me to put together for a stock analysis, let me know in the comments below. I'd be happy to put that together for you. And if you want to be notified of that, please subscribe if you haven't already, and hit that notification bell so you can be notified when I have future stock videos published. Perrigo was founded in 1887. They're a generic healthcare over-the-counter product company. They're primarily focused on the consumer segment. They do have about 20% of their business that is in a prescription business, but it's something that they're trying to get away with. Their current management team is trying to go all in on the over-the-counter solutions, but they have products from motion sickness, vitamins, cold and allergy, so a lot of things you're going to see in the drug aisle or in the health aisle. You're going to find a generic version that is produced by Perrigo. Their biggest customer is Walmart. They actually represent about 13% of their sales, so certainly a big customer of theirs. But another thing to keep in mind is that it's a really defensive stock in terms of if the country actually kind of is going to go back into another recession, because they have about a 20 to 30% price discount to your national brand. So again, if a consumer is actually faced with a recession, they would really stand to benefit from having the store brand or the private label alternative as opposed to that national brand. So certainly some reasons to be optimistic about owning this stock if you're afraid of a recession. But we're going to get into some valuation. I'm going to get into, there's a really big kind of, in my opinion, cloud kind of hanging over this company. I'm going to get into what that is. But that being said, that's a little background on what Perrigo does, what their business is, but now let's get into some revenue trends, valuation, things of that nature, so let's get into it. But that being said, let's start out by taking a look with Perrigo at their revenue for the last 10 years. Let's get some perspective on what their sales have been, what's going on, right? So we're going to start out with 2010. We see that their sales were about 2.2 billion. And then 2011, 12, 13, 14, their sales year over year were consistently going up. I mean, this was a really good period for the company. And this was followed by 2015, sales kind of falling off a cliff a little bit. They rebounded strongly in 2016. If we look from 2016 to 2019, as this unfolds, their sales, have really kind of been, from a low in the last 4 years, 2016 and 19 for full year reported years, from 4.7 billion to a high of 5.2, a little short of 5.3 billion. So there's certainly been some stability in the share price there, but we definitely can see that there was some rough years. I mean, 2015 was a pretty rough year for Perrigo, and around that time in 2015, they were actually approached by a company trying to take over Perrigo, and they were offering $174 a share, something in that range. And the CEO, really kind of, fought her off and said, no, our company's worth more. Shareholders shouldn't approve this deal. And he was successful in making that sales pitch and saying, hey, look, we're worth more. Let's not take this deal. And of course, we know how that turned out because, they could have been bought out for 174 a share, and they're currently trading at 46 a share. So shareholders that have been with the company since 2015 certainly wish that they would have been involved in that deal, but alas, we are where we are today. But at the same time, with the share price being down from that level, right, and saying that, hey, this was a much more expensive stock in 2015, is there some value here? Is this something that, makes sense, to be holding, right? So I wanted to look at a few different valuation scenarios, so let me kind of share that with you. I'm going to pull them up in a table I put together. And what I like to do, I like to take a look at valuation starting with just some general starting points to say, okay, what if the stock, had their free cash flow, for the last 4 years on average and never grew? What if they had it for the last 10 years, never grew from that point? Or what if they grew by 2%? So I look at different scenarios and I just get a feel for what that range is. And what I like to do with that is, when you start to look at companies that, if the share price, requires free cash flow growth of, let's say, 40% a year to justify the current stock price. Unless the business is really booming and I really love the company and the business model, I could say, hey, I'm, not that excited about the company. But on the flip side, if you find some companies where you can say, hey, even if this free cash flow, there was no growth, like I've got reason to expect growth, but if there was no growth, the current share price would actually represent a significant, value relative to the share price. All of a sudden, those become, stocks that you can start to get pretty excited about. You got to be careful, with that being said, not to just get sucked into a value trap. You've got to actually still say that you have a reason or a catalyst for why you think a stock is going to do well in the future. But I think that some of those investments can be stocks, again, that you can actually start to make a lot of money with. The most recent example, by the way, I had a video for US Concrete, and that was a stock, that's went from about $30 a share up over 50, and was trading about $30 a share. I put a video together and I said, look, even if they don't grow their free cash flow, they're easily worth about $45, okay, a significant premium. And then of course they went on in the last couple months to actually achieve that. So a quick primer there on some valuation and the purpose of doing this. But as I pull up this table, I'm going to look at 4 different scenarios. Okay, so we're going to be looking at if they had free cash flow that averaged for the past 4 years and they didn't grow at all, what would they be worth? Well, what if we look at the last 10 years and understanding that, in the last 4 years, there were a couple of rougher periods with free cash flow. The last 10 years was a better picture overall. So for the last 10 years, what if they were able to achieve that going forward and again didn't grow? And then we can say, well, what if, for the past 10 years, what if they averaged that for the past 10 years, but they actually grew in the future year over year by 2%? And then finally, we're going to take a look at, what if they grew, or if we looked at the 4-year average, that was one of the strongest in the company's history, so from 2015 to 2018, what if they were able to achieve those numbers going forward and then grow year over year by 2%, which is really going to be the most bullish scenario? Then the stock would be worth about $64. So we've kind of really got a range. We kind of listed here between $37 or $64, and really the depending, contingent factor being on how fast their free cash flow is going to grow based on some of their historical numbers, okay? So that being said, when we look at the valuation here, there is a significant cloud that is kind of looming overhead with Perrigo. So Perrigo is actually currently in the midst of a tax legal battle in the Irish court system. And why in the Irish court system? So Perrigo is actually headquartered in Ireland. And in 2013, they were involved in a transaction which was a corporate inversion where they relocated to Ireland by way of acquisition. So they acquired a company in Ireland and said, hey, we're acquiring them. They had their team of lawyers basically work out the deal where they could say, hey, our new headquarters is going to be based in Ireland. And they did that with the primary point to try to lower their corporate tax bill. But what ended up happening is that, they ended up having a sale of a business, which, I guess unaware to the company, or the company's been, made arguments that they would have no reason to expect that the capital, gains tax rate would be as high as what it was, given a lot of different factors. But, at the end of the day, what matters is, the Irish government seems to think that Perrigo is on the hook for about 1.7 billion euros in a tax liability from the sale of that business. Okay, so again, a little funny that they actually moved to Ireland trying to lower their corporate tax bill, and instead that completely backfired, and now they actually potentially are facing a monumental tax bill, at least relative to the company, because when we look at Perrigo and we look at the shares outstanding, all of those things, and we say, okay, when we convert euros to dollars, it's about $2 billion US dollars. When we look at that on a per share basis, it comes out to about $14 or $15 per share. Okay, so, and again, when you're talking about a company, that's only trading at $46, a $15 hit, essentially per share would be a really significant development. And I think that is actually one of the biggest reasons why the stock is trading where it has been trading at, because the news that they actually lost the case broke in November of 2020. So they had been fighting it, and basically, the most recent rulings, the Irish court said you are actually, due to be paying this amount, right? So it's something that Perrigo is going to continue to fight, and there's this big, like I said, kind of cloud overhanging the company to some extent about if that will have to be paid, if they're going to settle, if they're going to be able to settle, if so, for how much. There's a lot of unknowns with that, but I definitely think that that is one of the driving factors for why this company has underperformed since the March lows. Because again, when we look at 2020, I think as a lot of us are aware, a lot of stocks kind of fell off a cliff, in February and March, but they have since, just skyrocketed, and a lot of stocks are, not just recovered, but they're actually higher than what they were before the crash. Well, not so. Perrigo is trading up near $60 a share, and as I mentioned, they're still around 46. But what's interesting is Perrigo at the lowest point was trading at about $40 a share. So where they're currently at with 46, they're not that far off of their March 2020 low. So by looking at it from that standpoint, you might start to make the argument that, hey, they're not that far off that low, but at the same time, when you take into account the tax liability, I think that's a big reason for why this stock hasn't rallied with the broader market. So what I wanted to do is, along with this valuation table, now I want to kind of come over here and I want to add in, what the valuation would be based on if the tax bill had to be paid in 2022, 23, all the way through 2025. And I wanted to layer it in by year because, with the time value of money, if this tax bill is paid in 2025, it's not as big of a hit to shareholders as if it had to be paid in 2022. Now, what I'm going to be looking at here, this is actually going to be assuming that, the whole amount is going to be paid. Again, so even this is a pretty conservative view because in all actuality, I'm sure that they will work with them to some extent in settling this because again, this would, really impair Perrigo's opportunity to, function as a business if they were on the hook for that full amount. But when we look at it, we can now say that, if they had to pay it in 2022 with my bear case, all of a sudden, that $37, goes down to about $25 a share. Whereas in the bull case, so the, saying that they have one of the best performances, well, that $64 price target in that case goes all the way down to $53 if it's paid in 2025. So we can kind of see the range of possibilities there. At least one of the things to note, if things go really right for this company, if things go really right for Perrigo, basically you would say that in their, most bullish case, they would represent, or have upside in all of those scenarios, even if they were on hook for the full tax liability. With no tax liability in the bullish case, they would imply that they have about 40% upside. But for me, I think one of the bigger lessons here is, just a reminder to do your homework and really understand all of the factors that are going on with a stock or with a potential investment, because again, if you were looking at this investment without understanding that potential tax liability, this investment would look a lot better than what it currently does, right? So to me, sometimes when you're looking at a stock and you say, hey, is this too good to be true? Sometimes when you have that type of situation, sometimes it's not. Sometimes you can say, hey, the market maybe just has this wrong. I understand, XYZ going on with the company, but here's why I think it's a good investment. Those certainly exist, but then there's other times where you can say, hey, the stock looks depressed or the stock hasn't rallied with the broader market, and you can find something, in the details that actually explains why that's happening. So this, to me, is something that I really wouldn't want to invest in until that tax piece was actually cleared up. And I do understand that, if it actually was cleared up, that the stock would actually rally and be trading higher than $46 a share. But to me, I would rather take a wait and see approach because I just don't really see the value in gambling with that tax component, especially knowing that most recently in late 2020, the latest ruling was against the company. So again, a reminder, do your research, do the due diligence, make sure you understand all the factors going into a stock. But for me, I think it's a solid company, but just has that tax headwind that is just to me too significant to really kind of pull the trigger. But thanks for watching, and hope you enjoyed this video, and I'll see you next time.